Hello, folks. It's another time we meet here. As usual, I've been always breaking down some of the pair which I've been taking throughout the course of the week. This January of 2024 has been a very blessing month. Trend have been followed very, very much. I've been having a fantastic month since the beginning of this month. You can just get in review through my Instagram page. But today, at this time, I just want to talk and share with you about this Eurjpy pair. This is one of the very amazing trade I have had for this past 2 weeks. Like I did the first analysis on last week. Today is Friday, the third week of January. I did analysis on the second week of January. The entry was triggered. It was just a matter of waiting for some things to happen and then do the re-entry analysis. Like it was January 9. You can see here from the origin chart. It was January 9 last week. It was Monday or Tuesday, if I'm not mistaken. It was Tuesday last week. So I just waited for this entry to be triggered. It took about 3 consecutive days since the break of the zone, which I was looking at. And then price came to retest. After this break, price came to retest. The entry was then triggered. The big lesson to catch up from this trade is that the whole message of forex trading actually is found through the higher time frame. I'm not against scalping. I'm not against counter trend. Of course, I sometimes take counter trend, but normally I prefer counter trend of the higher time frame because I catch up with at least a minimum of 90 pips, 100 pips to 100 or 200 pips. So that's how it works. Like with the zones to zone strategy here at Gatose FX, I always try to be aligned with the higher time frame. You understand? Because the higher time frame order flow is what the institutions are looking at when they are positioning their orders. And of course, I'd like to go along with them. I don't want to go against the big fishes in the sea, right? So zone to zone strategy teaches you resilience, patience. Like I always say when I'm teaching in my classes, I tell my mentees, uh, most of the forex quotations say that you have to be patient, you have to be resilient, wait. But absolutely you need to know what are you waiting for? What patience do you need? What patterns of the market language do you look upon? So that you say, I'm waiting for A, B, C, D to occur. And once it occurs, I make a certain decision to get moving along with the market flow, right? So literally, I try to induce to my mentees and students to understand the language of the market. Turning points is very important. You know, when I started Forex, I hated the aspect that uh, I must be on the screen during London session or New York session. I didn't like that one. So once you understand the turning point of the market, trading session has totally nothing to do with the movement of the market. It's just a matter of volatility during the time. And of course, for those who are looking to scalp like 50 pips, 100 pips, it's okay with them. But then, even if I'm a swing trader, but at least I so many times capture that scalping, because what matters is how many pips, how much money you make during the trade. It doesn't mean that you swing for a long period of time. That means you get many pips. Like you can go and review one of the pair in my Instagram page. I think it was Eurjpy. I have had a swing of this pair last year in May, I don't remember well. I have had a swing of 4 weeks, but only obtaining 135 pips. So it doesn't mean if you stay long with the market, you get more money, or if you stay short, you get more money. The point of interest and importance is to be aligned with the market. If the market is selling now, you are also selling. And if the market is buying, you are also buying. So let me cut this story short. I don't want to talk much about this. I will just preview the top-down analysis hypothetically by just displaying the chart as how I did my top-down analysis. Remember, this is Gatose FX, zone-to-zone strategy.